Good morning and hello, I'm Professor Code and this is the Forex Supermodel Racing Review and Forex Review for Tuesday the 22nd of November 2022. We're going through a very lean patch on the racing. Yesterday we had no bets, so the account's static at plus 53.35 units approximately in profit from a peak of about 72 plus. We've got no filters in operation today again. The racing's pretty scrappy again. And the weather's been pretty rough in the UK. So we're looking at a no bet day again. And on the Forex front, there's quite a lot going on in a sort of a neutral sense. The key thing really is this Thursday the 24th, it's US Thanksgiving. So that means basically the trading week stops pretty much after the on Wednesday after the FOMC minutes, and if you remember on Wednesday we've got Wednesday the 23rd, you've got NZD New Zealand dollar rates decision early excuse me, and late you've got FOMC minutes, and in between you've got US durable goods. Which is a tier 1 event. So there's a small window for a bounce trade, data bounce trade. These are the windows between this early morning New Zealand rates decision and the US durable goods, which is about 13:30, 1:30 our time, and then we're done after 13:30. Because people will be gearing up for the Fed minutes and shoving off for Thanksgiving. So what's been happening? Well, US 10-year, US 10-year on the bonds, it's got basically this sort of look. That's the price. So we've got a slight increase in yields. The 2 years very similar. So in terms of look, the dollar index DXY. Dollar's come off. It's come up a bit. It's coming back down to there. The dollar's dirging around. It's weakened a lot. It's come back and it's thinking about weakening a little bit again. So it's in between. Gold obviously won't like that scenario. So gold came up off the dollar weakness. Is now thinking about going back down, and oil is soft. So oil's soft, and looks like we're sort of moving into a sort of a demand destruction period. In other words, people are going to be able to afford less fuel and goods, and the petrochemical industry is going to be falling in terms of demand. But that doesn't mean the price ultimately will stay low because of supply restrictions and so on. And Saudi Arabia recently announced they were thinking of upping oil production again, so that's what's whacked the price really. So and then Wall Street, which is equities, really, we've got this like double top in Wall Street, which and they're sort of precariously thinking about which way to go. And if you remember, in the good old days, you used to get what's known as a Santa rally, which was an equity rally run up to Christmas to give everybody the feel-good feeling and end of year returns for the equity industry. But that may not happen this year. Things are changing rapidly. So right, what's happening in the world? Well, we've got this sort of ongoing war in Ukraine, as you know. There seems to be there's no political will to put a lid on it. It could be stopped relatively quickly if people got together. So they want to carry it on for some reason. It's probably useful for their aims. We've got the emergence of sort of the WEF, World Economic Forum, dominating individual countries' democracies. And our Western leaders seemingly kowtowing to the WEF. So we've got a sort of an unelected higher one world sort of organization directing individual countries, or trying to, and we've got our leaders sucking up to them. So that's and also you've got this divergence between, you've got closer ties between Russia and China. China's got major problems as well, so I wouldn't be too worried about the resurgence of China. China's starting to crack around the seams, and that's arguably a positive for the West, because we're in such a shambolic state. That's where we are now. On an individual basis, obviously that's sort of macro global events. The likelihood is that we're going to get a further increase in interest rates. If you've got a house mortgage or debt, and you can possibly I know you can't do much about your mortgage, but you can certainly cut out a lot of your personal debt. If your car lease is coming up, don't renew it, in our opinion. Look for alternatives. Look for a second-hand vehicle. We used to drive around in what we used to call disposable vehicles, which we used to pay about £400 to £600 for. They used to have about 9 months MOT on them, and if you're lucky, they would sort of dirge around for about 9 months till the MOT collapsed. And you could just sort of kick it and turn the key, and away you went. You didn't win any prizes for style, but you certainly you cut your costs dramatically, and you got out of this like lease cycle, which is very expensive. And in the climate moving forward, you really need to. If you've got credit card debt, you need to think about chopping that out. I say be as flexible as possible, because we don't know where things are going to work. Once we reckon cash has got about 2 years in it before the central bank digital currency converts all our cash deposits to Bitcoin or whatever else it is, and we've got about another year after that before we're on a purchasing carbon credit system linked to a social credit score. So I think we've got a small window. We've got about 3 to 4 years before things go really bent. So you've got time to get your act together and do a good audit on your personal finances and general situation. So anyway, if anybody wants more detail on that, let me know in the comments. So just to get back to where we are, racing's been a complete pain in the neck recently. We've had minor success on laying, as I said, and the account, we stopped with writing the account. Forex is going okay. We may get this bounce trade in on Wednesday, as we've just mentioned. So anyway, look after yourselves, and thanks for watching, and take care and goodbye.